In this episode, I'm going to be showing you through the example. Uh, we'll be looking at, US 30 and just show you pretty much what I'm expecting to see. You can see this is the current market price. You can see that, the market is just still yet to um, start trading properly. This is Monday morning, and we are yet to cross into the London session. Okay, so the market, it's really not trading so much because it's Asian session currently. But I just want to draw your attention and see what's happening on the chart before the market opens. You can see that the previous trading day, which was on Friday, we had price traded all the way to the upside, taking out liquidity. Mind you, this provided a trade opportunity on the Friday. All right. If you can see, this was an opportunity that could have been traded up until this point. But that's by the way. What we are seeing now is another potential opportunity. That's if it holds. All right. So the market dropped hugely, like we know about FVG imbalance. Okay. So now what am I looking at? If you look at the top of this particular candle, you could see to this point, you could see how huge the imbalance is. And we also had this price opening very much below this low, which is known as volume imbalance. All right. So that's opening gap of a particular candle. Right. So that also acts just the way the FVG acts. Right. So what I'm expecting personally is, since we cleared this high, right, and then price dropped, taking out this low, right, I'm expecting that price would consolidate a little bit around here, eventually taking out some highs and maybe trading into this zone. Okay, that's my expectation. And then trade down to this other block and react to it, eventually get into this FVG, right? So even if we get to this FVG and price decides to, continue to the upside, that's okay. But this is an area I know that price will react to, all right? Price will react to this area once price goes up. Another thing that price can do is that price may drop without getting into this zone. Probably once it takes out this zone, trade into this area, because we have a breaker block. This is the bottom of a block here. If we go to the 5 minutes time frame, you could see it clearly. All right, let's see this breaker block. All right, the body is huge. Okay, so price may just weak out these highs. You can see that these are highs. Maybe at the opening of the London session, price may just weak out the highs, trading into this block and give us massive drop imbalance, maybe on the 1 minute or 3 minutes or even on the 5 minutes. And then we could get an entry to trade up until this point or into this FVG. And then as much as this particular FVG is untouched, then price would likely, because FVGs act as support and resistance, then price will likely, trade from here. All right. If you look here, apart from the FVG around here, we're also seeing the breaker block here. All right, you can see the massive body as well. So yeah, this green candle is a breaker block, and this drop around there is the other block. All right, this consecutive candle drop is the other block because that was the last drop before what change in cost of delivery. So yeah, top of the other block, you also have your breaker block and you have your FVG. So this area is going to act as a very good support to price. So what I'm seeing is if price doesn't get to fill up this imbalance before dropping, then it's going to drop to this part and goes back into this area. And if it consolidates a bit, it might get obstructed and price will eventually start dropping. At the time price drops again, it's not going to be affected by this FVG anymore. Possibly if it didn't create a new one, then it will drop to this point because you can see equal lows here and you can see another FVG here. All right. So that's by the way. But first of all, what I'm saying is we can have price before price will eventually start dropping to this, even to this point. Before price will gain that momentum, price will first clear these highs, all right, to gain some, liquidity, because liquidity is the fuel that the price needs, right? And then this place will act as resistance, giving it enough force. Right, so even if it doesn't trade into this area or getting into this volume imbalance, it will eventually, maybe weak into this zone because of the breaker and then drop. So this will essentially or possibly provide a trade opportunity for the London session, right, which eventually drops and maybe continues to the upside. I don't know, anything is possible. But what I want you to note out is how price is affected by, imbalance and thereabout. So even if I'm not able to take this trade, or even if I decide not to take it because price may not give what is expected, I would also be recording, what's going on the chart. So you see how price is respecting these zones. But if I'm available during the London session, I would love to see price trade into this area, give me a massive drop with imbalance. That will be my entry, and then I'll be looking to get out from the top of this other block, or maybe hold a little position to see if I trade on top of this FVG to touch this particular stronger structure, and then that will be final exit. And if price is able to deal with this zone, then it probably continue going down, which I doubt. All right, the only way I see price continue going down from here would be if price has tested this zone properly, all right, which is of low probability. The highest probability will be price coming here and dropping, but the low probability is that price testing this zone properly and still want to drop, because price may test this zone properly, drop a little bit and continue to the upside, right? So you just have to bear that in mind, which is why if price is trading in this zone, the wise thing to do would be to go down to a lower time frame, like 1 minute. If we get some form of liquidity formation, then we could trade, make a little trade, and then before price eventually reverses. But if price decides to keep going down, price will get down to this point. If here is still untested, then price will find support here and go back up. But if price is willing to keep going down, then there could be drop to this point first, move back to this point, and then eventually drop to this point, right? So that's just it. So what I'm expecting um, now is still a sell. So the sell is still very much valid, especially for London session. We clear these relative equal highs. You can see the equal highs here. All right. We clear these relative equal highs. Once they are cleared, then price will eventually touch this before trying to drop. All right. Forget about this. This one is not, it's nothing. So yeah. And the target should be here. All right. Depending on how you get your entry, you could get a good risk to reward from here to here. So that's by the way. And yeah, let's wait for it. So fortunately for me, yes, my stop loss should have been here, but because of the fact that I knew about the spread, and I normally give like 2 points away from my stop loss. So I was not hit, all right. I was not hit, and because of the time of the day, that's why price is not looking so nice. But I wasn't taken out, all right. And I'm feeling like I should just close out the position, looking at the time of the day, or just hold it and bear the potential loss of this money, because price might still come down to this part. The time matters. This is why we focus on the time of the day, all right? So I said, if you want to trade the London session, look for price between 8 to 9 a.m. and at most 10 a.m. Then leave the market. But once it gets to 11, it's not really good. As you can see, the time of the day as I'm recording this video is already 12 noon, right? 12 noon, the New York market will be getting ready, okay? So although I'm having a nice bullish price action here, but I don't know how it's going to go, but let's just see how it works. So I was fortunate enough not to be taken out, because yes, my stop loss was supposed to be here, but I took it down a bit, and because of spread and because of the difference in the market, all right, I'm using here Pepperstone, and then I'm trading MFF, all right. So the difference of this thing, I was not taken out, all right. So that preserved me. But you could see how I was willing to take the loss, because even the risk was not much that I took, looking at the time of the day, okay? Because I expected that price would have reversed from here, but when it started dropping from here, I felt like, okay, this trade wasn't going to work out. So that's just it. All right. So we continue on New York session. All right. By New York session, I'll show you how this trade eventually went out. If I closed it, because I might just close it right now because of volatility sake, or depending, break even on my second entry and close the entry I entered last around this FVG. I might just break even on it and close the ones I entered at the top for risk management purposes. But this is my target, and we might get to the target. All right, we might, because the only area I'm seeing is just this guy here, but it's not that strong. So we might get to the target, but at this point, break even here. Then this one, if I break even here, it might not be good, because price can return back here and go up. So instead of breaking even here, it's as good as just closing it right now in some profit. All right, that's just it, because of my doubts based on time of the day. But this trade is the setup is actually a good setup, seeing the fact that sales rejected and bulls took over. All right, so that's just it. You can see what I did, how I took the trade at the level of breaker and at the level of FVG. Those are entry areas. You can use any one of them to make your entry. You just need to understand this thing. All right. So yeah, I'll be holding the one at FVG, but I'll be closing this one here, the one I entered here, because I don't know what's going to go on right now. So until then, I will update you. So in addition, this is DXY. So DXY on the daily time frame just tested a major support area, or yeah, you can call it a demand zone, right? You can see that this is FVG, and price took out this liquidity and drop here. Like I said, the only other block that works is the other block that's taking liquidity. You can see that this liquidity was taken here. You can see that liquidity was taken. This is a low, all right? And yeah, it was swept into this FVG, all right? So this other block becomes really important. You can see how price reacted to it the first time and failed, okay? But then trades into, if you refine it to probably 1 hour time frame, you could see a smaller order block around here, right, which traded into and eventually trying to respect it, which looks like it's gonna respect it because we are having a very nice, candle setup around here. You can see this more looking more like an engulfer, right? A bigger body, stuff like that. So what I'm saying is that for the bearish bias that we have for US 30, both pairs move in opposite direction. So for the bearish bias that we are now having a bullish bias on the dollar index. This is the dollar index DXY, right? We are now having a bullish bias. Now, let me remove this. All right. So if we look at now, we see that price is going up, and then here we have our FVG, right? This is a gap, okay? This is a gap, and this price is going up already. Is there any reason why price would eventually want to return into this zone before continuing to the upside? There's possibility. We just broke an old high here. There's a little one in here which coincided with this FVG. Now, if you want to check, you see that if we take our fib and draw, because we want to know where this guy is likely to start reversing from. So if you take your fib, you draw from here to this bottom, you can see that this is a 50% retracement Fibonacci area, of which I still feel like price might get to this zone before it reversing. But if it's moving in consonant with this, all right, it might be reversing as soon as possible. I don't know. But all I wanted to show you is that this is bullish already. So looking at this, you see that we are at the 50% retracement level, this 0.5 fib. Okay, and you can see how price just tested it and it's looking really nice in here. All right, it's looking really nice, and that's it. Okay, but we have an area here where we have imbalance, which this guy just touched. But the end of the imbalance, we have more like order flow, or you can see that we have a breakout around here, but there is no reasonable order block. This order block didn't take out liquidity, all right? So it's not a valid one. The only thing that is valid here is the breaker, all right, which is this black candle you're seeing here that is huge. It's called the breaker block, all right? It was the last bearish candle and it's huge. That's why it qualifies to be a breaker, and it's found shortly at the close to the end of the imbalance. So that's a very strong zone, right? If we should extend the fib to show us this number here, you could see that the number here should be 61.8 or thereabouts fib level. Okay, so I'm also expecting that price will get here and probably drop to this point. or this guy drops to this point and probably not get here and goes up, hit here, drop to this point before continuing anything at all. But the most important thing is locating these important zones, right? You really don't need so much to know about so much of order block and breaker block, right? Being the fact that you understand the concept of FVG, you could draw your FVG from here to here, and you see how price is trying to respect the FVG. Okay, and then you could possibly see this area as resistance area. So you don't really need to going into details of breaker block and other block. But if you need that, I already have such video. But first of all, understand one concept before going to another, so you avoid confusion. Right? So that's pretty much it. This is bullish bias. US30 is bearish. I think we are in order. All right. Well, whatever it is, trade what is on the chart. Okay. So that's it. We're still waiting for the right time, and we continue the video. So like I said, yeah, it's already London session, but like I said during the Asian session, I said that price, since it was reacting around here, price may drop, and during the London session, you can see what happened here. This is a beautiful trade. Anyway, if it was it happened on US30, this could have provided a trading opportunity. You could see how beautiful this was. It came, took out liquidity, and if you look closely, we still had a little imbalance around here. All right, so like I said, price preserving in this particular FVG, which coincided with the breaker block or another, price just came here, and you can see. So the next area I believe price is going to react to in this particular area, yes, for DXY. All right, now price probably get to this area before it drops and then continue going high. That's what I'm seeing. All right, so we are still very much bullish. All right, then for US30, which did not provide us entry based on my analysis, you can see what happened there. Let's to see that price continued dropping. Let's just go to 5 minutes time frame. So because that was where we were. You see how, look at how price consolidated, and during when market opened, that was exactly it. All right, we had this bullish candle. It didn't take out any liquidity, all right, but it dropped, and then we had this massive drop here. All right, and you can see that because it didn't take out any liquidity, look at the way it was moving, all right, sluggishly, compared to DXY that took out liquidity and moved really fast. You see the reason why you need liquidity, right? And like I said, you know, I gave different scenarios. If we test this first, they will go up. All right, possibility is high that will now go up and then come back to this FVG. All right, so because this is very weak, there's high tendency that price will respect this order block here and begin to go up. There's high tendency there, and if it provides a trading opportunity, it's one that is worth trading. Remember what you're looking for when you want to trade this. If you are to trade it, it should be that price, all right, must have touched the body of this order block and created something like a double bottom, all right, or FVG, right, breaking a structure. With the retracement, that will be entry. Where would you target these highs? All right, target these highs, and then you probably leave a few partials and then see if it trades into this zone. That's one of the ways you can trade this particular uh, chart, right? And another way is waiting for the sell, right? Price may not give any nice price action around here, may not give us any good price action around here. So what you do is, if you don't see any good price action, all right, you wait for it until probably during the New York session we might get a good price action to either sell or buy. I really don't know, but since the XY is mostly bullish, so we're seeing that this will be mostly bearish. All right, so I'm expecting price to at least tap into this breaker block and drop down to this FVG, and maybe continue dropping after respecting the FVG. All right, or possibly tap into this, which will be a stronger move downwards. All right, so whichever one, but this pretty much might provide us entry using this other block. Okay, now you can see price after testing that other block. All right, you can see this is a breaker block rather. You can see this high was a high I am looking at. Okay, at least let price take it out. All right. But then price just as if it's sweeping out liquidity. Okay, and it's good to just put it at the weak side. All right, so you don't get misled. You need the body of the candle to close hugely, all right, above. If this candle closes very bullish above, all right, then I'll wait for the second candle. Once it retraces back, all right, to this zone, that will be the entry, and the stop loss will be the last low you need. So guys, look at what happened eventually. I had to come down to 3 minutes to see properly what's going on. So price eventually traded high. If you check the 5 minutes, it gave a really nice candle, right? It gave this candle, and after I gave this candle, I came to 3 minutes time frame, and you can see price has closed bullish above this last one now. So I came to 3 minutes time frame, and then at the close of this candle, as it opens, as it's retracing, I've already taken a trade, and my SL is here, right? So let's see how this trade eventually goes through, if it takes SL or not. So looking at this now, price eventually came down to this FVG, testing this other block, all right, but then it's still struggling. And I noticed something trading US30 by this time. I've never traded US30 by this time before. I just took a little position to see how it goes, but the spread is really high at this time of the day, and I think maybe lack of volume, I don't know, but this price action is supposed to hold. So but my SL is just here, so let's see. It's already looking like it's not going to hold, but if I'm taken out, then I wait for another trade during the New York session. All right, this is why your trade management skill has to be in place, right? Yeah, so I'm looking at it, it's looking like it's going to take me out. Okay, yeah, but I don't really see any need of moving my SL to this point, because this was the area that served as this was the area that served as the entry point, like what engineered this move. So if price takes this out and eventually still goes in my, oh, it has done that. Eventually goes in my direction, there's no problem. I'll find another trade. All right, that's it. So fortunately for me, yes, my stop loss should have been here, but because of the fact that I knew about the spread, and I normally give like 2 points away from my stop loss, so I was not hit. All right, I was not hit, and because of the time of the day, that's why price is not looking so nice. But I wasn't taken out. All right, and I'm feeling like I should just close out the position looking at the time of the day, or just hold it and bear the potential loss of this money because price might still come down to this part. The time matters. This is why we focus on the time of the day, all right? So I said, if you want to trade the London session, look for price between 8 to 9 a.m. and at most 10 a.m. Then leave the market. But once it gets to 11, it's not really good. As you can see, the time of the day as I'm recording this video is already 12 noon, right? 12 noon, the New York market will be getting ready. Okay, so although I'm having a nice bullish price action here, but I don't know how it's gonna go, but let's just see how it works. So I was fortunate enough not to be taken out because yes, my stop loss was supposed to be here, but I took it down a bit, and because of spread and because of the difference in the market, all right, I'm using here Pepperstone and then I'm trading MFF, all right. So the difference of this thing, I was not taken out, all right. So that preserved me. But you could see how I was willing to take the loss because even the risk was not much that I took looking at the time of the day, okay? Because I expected that price would have reversed from here, but when it started dropping from here, I felt like, okay, this trade wasn't going to work out. So that's just it. All right. So we continue on New York session. All right. By New York session, I'll show you how this trade eventually went out. If I closed it, because I might just close it right now because of volatility sake. So seeing what is happening in the market, this is as a result of no volatility, all right? Because you can see what's going on. So instead of me to take unnecessary loss, as at that time, I closed those ones I entered around here. I closed the trade, and then around here, I had to exit even the one I entered at this FVG, all right? Because I'm not sure of what the market is doing anymore because of lack of volatility. So it's best for me to wait for the New York session. All right. So at New York session, we'll continue. Thank you. So, guys, you can see that it was a nice thing that I think, yeah, I got out of here. I got out here, and you can see because of the time of the day, it should be a noon. That should be a break time in the London session also before the New York. So like I said, it was a wrong timing. All right. So the trade, I only took it based on illustration, and you can see where I got out. And because I told you its price was going to this FVG, yeah, I know where price was going to, but based on the time of the day, it's not advisable to be in that trade for the fact that it is scalp, so it's not good, right? So now is New York session, all right? In my time, New York session starts by 1:30, all right, and ends by 9 p.m. So yeah, that's it. So now what are we looking out for? I'll take us back to that 5 minutes time frame, right? Like I said, we want to see liquidity. If you play the video back, you remember what I said, that if price doesn't go into this breaker block around here before trading down, right, into this other block or breaker block again that is here, then if eventually during the New York session price trades into it, then price will drop all the way down to this FVG. The reason is this: price has already mitigated this guy and left this guy unmitigated, all right? The FVG here is still unmitigated. You can see this old high, which is your breaker as well, is still there. That's a stronger area for price to reverse. So now what I'm going to be looking out for is that I believe that price will not trade below this zone, all right? That's my belief, all right? I believe price won't trade below it. So what I'm going to be looking out for is for price to trade up into this breaker. Once price trades up into this breaker, possibly, mitigate this FVG here. If possible, it gets to it, which is a low probability, but the high probability, like I said, would be for price to trade into this breaker, and then we have our huge drop, right, up onto this FVG. But if for any reason, price trades into this FVG, mitigating this FVG, all right, with huge drop, then what I'm going to be looking out for is for another FVG that was created here, and eventually use that FVG to, trade down into this zone. All right. But that will be a low probability trade. All right. So, but the best setup would be first we get into this breaker and drop, or if we eventually start dropping from here, which I don't see any way we can drop from here. If we even drop from here to this FVG, price will move back to this FVG, all right, and possibly start dropping. Yeah, because there's no enough momentum or volume or liquidity to drag price up onto this liquidity zone. So if price even has to drop, it should drop to this FVG and go back to this zone, right? That's one thing that possibly would happen. If you can see here right now, you see how I mark this place. On the 1 minute, you see very well that this is a nice liquidity zone. So price may take out all this liquidity, and even this one as well, and even this one, but might not get to the FVG. So, and that's it. Price just takes out all this liquidity zone and creates another, up move to trade above this liquidity area, right? So folks, look at what happened. Like I said, that price may clear this liquidity, leaving this FVG for us, all right, because it might save it to come back to it later. That's after getting into this breaker block here, right? So price took out all the liquidity, right? Look at the way I made the entry just right now. And when it took it out, we had a shift of structure here. You can see this high was taken out and there was FVG created here. Immediately price dropped into on top of this FVG. In fact, I couldn't catch it. So I just entered on its way up, right? That was just it. So now, where are we targeting? We are targeting this high. The reason why we are targeting that high is because we have lots of liquidity lying around here, right? Apart from that, safe, the breaker block is still not tested, but that's none of my business anyway. What I know is that the market is going to this high, okay? So I'm here with it and I know what to see to exit the market, all right? Either I exit at the high there, and if the market doesn't want to go to that high to take out all this liquidity, then I probably would, exit at a certain point, all right? Hello, traders. I don't know, maybe today being Monday, that's why we have this type of trade setups, okay? So you can see that this was where I made entry, okay? When price began to drop, I made entry as price was dropping, all right? And then when price got to this zone, I discovered that, yes, price just tapped this FVG and started dropping, but I knew that this was a strong zone, all right? So I felt maybe price would drop to a certain extent and keep going, but price dropped really hard fast. But my stop was here because I knew that this other block is a strong one because it took out liquidity and that price moved from liquidity to liquidity. All right. So what happened was that I actually entered another position here, right? When it came down and started reacting to this other block. So I took trade again until it got to this point. Immediately was trading above this point and started reversing. I think around here, I took out some position. And when it continued, I took out everything. All right. I took out everything and yeah, because I discovered that okay, it's more like it traded even higher into this particular zone because this guy is also serving like an order block. All right. I'm sorry, but you can use just FVG because this is FVG area. So if I were you, since you don't understand the concept of order block properly, you can target from FVG to FVG. So I would have exited most of the trades here, but I was feeling like it's not so strong of FVG, so the price would take it out and go into this zone. But no, price dropped, and when I thought it was going to keep going back up, it tried to keep dropping. That was when I took some profits, but waited for it. When it came here, I took it again, and it got to this point. It got to this point. I took partials, but I didn't exit all, and it dropped with speed when I break even and hit my break even. Funny though. So when it got to this point, I had to, because I know that this place was already protected. So I had to take the trade again. So when I took it and it started reacting here, I exited again. That was just what was happening today. And because I saw the struggle around here, so I exited, right? I didn't want to be in the trade anymore. So I was no longer interested in buying, but in selling. So I wanted to just see struggle anyhow I want to struggle and get to this my zone. Remember, like I said, our breaker block is still here and bigger FVG of higher time frame is here. So that was just my own this thing. That was what I was expecting, all right? But what happened again? Price traded above this one again. And dropped. By that time, I wasn't in the market anymore. So as you can see, this FVG is finally being tested. So let's go to higher time frame. Let's go to 5 minutes. You can see how price has traded into this FVG, into this breaker. You can see there's a breaker block here, which is your old high. So price has traded into this FVG breaker block, right? This is a very strong zone. So, but I'm not willing to take any trade here anymore. Like I said, I'm not willing to buy anymore. Also because of the time of the day. And this is a valid buy anyway, but because of the time of the day, it's already past 5 p.m. So I'm not willing to get into any trade anymore. So until tomorrow, I will see if price eventually comes up. So I will have to, see any good setup for a sell, or maybe price will continue going down. I don't know. Because of the way the market is, it's not advisable to trade it. For what has been happening around here, it's not just advisable. So I'll just leave it. But normally this is a good buy setup because we have this huge candle, all right? If you go to 1 minute, this is actually a structure shift. And we have FVG between the low of this candle to this. And you can see how candle came back into it, tested it, and is trying to go up. So this could have been an entry, your SL here, and you watch to see how price struggles. But I'm not willing to, be in the market anymore until tomorrow. For the sake of psychology and for the sake of, peace of mind, always trade when the market is clean, because I have attempted this market more than 3 times today. And most of the
most of my positions were closing break even and some small profits. So I'm not willing to enter again until another trading day. All right. Until then, stay focused.